Hello and welcome to another update video about XRP. We start the video today on the daily chart. Just wanted to show you this latest price action from the higher level time frame. So we have the situation here on the XRP chart that in the bullish interpretation, and this is valid as long as we stay above the, let's say, 12-cent level. So as long as we stay above this low here from March 2020. As long as that's the case, this sort of bullish interpretation of the chart is valid. And that would be that we created a wave 1 back in 2017. We then came down in a wave 2. And we have another 1-2 set up. And that we're basically already in the third wave to the upside. No, 1 second. That was maybe a bit difficult to understand. So 1 up, 2 down. We're now in the third wave to the upside, and within this third wave, we are creating currently this 1-2 setup. And again, that is valid as long as we're holding above 13 cents, yeah. The only reason for concern here that I have with the XRP chart is that it is one of the few, I mean, there are actually quite a few, but it is one of the cryptocurrencies that failed to make a new high in the last bull run 2021, and that is a reason for concern. It really is, because you know, coins or assets are doing that if they start to sort of fade out. Now, I'm not suggesting this is definitely going to happen, and I really hope XRP will be strong in the next bull run. But what I can tell you, and this is just a warning for the future, if you see that XRP in the next bull run fails to make a new high, then get out. Because then it means that something like this is happening. And I will show you that on the log chart, you can just see it better. So it would mean that, you know, we moved up basically in an ABC. And then we're moving down 1, 2, 3, 4, 5. And that is how over time then it will sort of fade out, start to get unlisted and everything. So this is where you make from bull run to bull run like lower highs. So it's just a warning, just something that I talk about whenever I see a coin which in the last bull run didn't make a new all-time high. Okay, it just adds to the risk of these coins. It just shows the weakness of the chart. Now, this could still become something, but it's just something worth watching out for in the next bull run. If coins die, they rarely die straight away. It is more like fading out over time, you know, people becoming less interested. But I'm just saying that because it failed to make any all-time high in the last bull run. But this is, of course, you know, something for the future. At the moment, I consider the bullish option here. You know, my view is that this here was a wave 1 and we're now coming down in a wave 2 still. That the move down of the April 21 high was a WXY pattern, WXY. We're currently in the Y wave here. Yeah, and the Y wave consists of A, B, C, and we're currently probably still in the B wave, and we're going to zoom in now. I go to the 4-hour chart for that. There are basically 2 different possibilities that I see here as very likely. One is a little bit more bullish maybe, or short-term bullish. But hey, what I said to you in yesterday's video basically so far is working out. We're going to double check targets, but the idea, there's 2 counts here in the very short term that I find very likely. First of all, we need to recognize this head and shoulders pattern, which is emerging here. If that neckline breaks, this ascending trend line, which is around 33.5 cents, then this could send us down way lower. If we just for fun, just have the target here of this head and shoulders, roughly we add it to the breakout point, it could take us down to the 12-cent level. That's significant support that we've just talked about. But in the short term, there is still some upside possible. Well, we talked about that yesterday. We're now getting close to resistance. Why? What is it about? Well, it's about the idea that, as I said, we are in a Y wave. The Y wave consists of A, B, C. The B wave itself is an Elliott wave triangle, as it seems to me. You can actually see the triangle shape. That's not absolutely necessary when you count an Elliott wave triangle, but you can actually see a shape. And all we need to adhere to here is certain rules. For example, that the subwaves need to be corrective waves, that the waves C and E need to be lower, or the wave C needs to be lower than the A wave, the wave E needs to be lower than the C wave, the wave D needs to be higher than the B wave, for example. So I'm going to show that to you now. A, B, C, D, E. And then you would expect it to break out to the opposite side of the E wave, which would be down. Funny enough, that head and shoulders target is basically also the same target that you get if you take the height of the triangle, right, and add it to the breakout point. So it's quite well aligned here. So this is where we are, and the length, in terms of length of the E wave, so the E wave must not get above. It must not get above the C wave here, so above that peak, because then this triangle will get invalid, or it won't actually be invalidated, but we will then have to just move the C wave over, because it means C wave was probably never finished, because the E wave needs to stay below the C wave. Yeah, the C wave is at 41.9 cents, so we need to stay below that level. The ideal target for the E wave, which is the last wave of the triangle, is basically the 61.8% extension of the C wave, and we get the 39.6 cent level. That's why I yesterday already added here this as resistance. So I wouldn't be surprised to get to that level, and then that would be an ideal time to turn around, an ideal point to turn around. We currently also move up only in 3 waves. So that looks rather corrective as well, and is all part of this E wave. And for anybody who's not familiar with Elliott wave triangles, an Elliott wave triangle is, again, it's a corrective wave structure. And in this case, the actual B wave, yeah, so bear in mind the Y wave in which we are, that I showed you, consists of 3 waves, A, B, C. The B wave obviously has subwaves, and these subwaves are in the form of a triangle, A, B, C, D, E. That's possible because B waves can be triangles. And then we would expect to move down afterwards. A target I gave you, but also there's other ways of calculating the target as well. For example, one way of doing it, just to show you an example, we could also understand this move down as an ending diagonal, not as a triangle, where we say that the B wave actually finished up here. And since then we have been moving down already in 3 waves. 1, 2, 3, possibly wave 4 already finished, and we're now in the wave 5 down. The wave 5 to the downside target for that would typically be, that you take the length of the wave 1, you add it to the high of the wave 4, and then you get a first target at 27 cents and the second target at 18 cents. So I'm gonna add these to the chart as well, just sort of as reminders, yeah, and as key support levels. So yeah, there's 2 scenarios, both for me point to the downside. I would only consider something more bullish if we really break out of this triangle impulsively to the upside, and then also take out the 55 cent level. So there's a lot that needs to happen out of this structure, which is very, very hard to understand as a bullish breakout structure. Very, very hard. A lot would need to happen, yeah. And at the moment we are below resistance, so there's still a lot of downside pressure. So yeah, I'm waiting for this to turn around really at any time, ideally at or below 39.9 cents. Okay, and that's my update about XRP. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.